In a shocking turn of events, some of America's most iconic restaurant chains are facing unprecedented challenges that could lead to their complete disappearance from the dining landscape. The restaurant industry has always been notoriously difficult, but recent economic pressures, changing consumer preferences, and the lasting impact of the pandemic have created a perfect storm that's threatening to wipe out several major players. Let's dive into why these 15 well-known restaurant chains are on the brink of extinction. First up is Ruby Tuesday, once a mall dining staple. The chain has already closed hundreds of locations since 2020, dropping from over 700 restaurants to fewer than 200 today. Their attempt to rebrand as a more upscale casual dining destination failed to resonate with customers, and mounting debt has forced them to continue closing locations at an alarming rate. Boston Market, famous for its rotisserie chicken, is another chain in serious trouble. After filing for bankruptcy in late 2023, they've shuttered more than 300 locations in the past year alone. The rise of grocery store prepared foods and meal delivery services has hit them particularly hard, as consumers can now get similar quality rotisserie chicken from their local supermarket at a lower price point. Friendly's, the East Coast institution known for its ice cream and family-friendly atmosphere, has been struggling for years. Their latest financial reports show a 40% decline in revenue compared to pre-pandemic levels. The chain has closed more than 75% of its locations since its peak in the 1980s, and industry analysts predict the remaining restaurants might not survive beyond 2025. TGI Fridays, once the pioneer of casual dining and happy hour culture, is facing similar challenges. They've recently announced plans to close 100 more locations in 2025, following the closure of 36 restaurants in early 2024. Their attempts to modernize the menu and appeal to younger demographics have largely failed, and their dated concept is struggling to compete with more contemporary casual dining options. Applebee's, despite their social media presence and marketing efforts, continues to see declining sales. They've closed over 200 locations in the past 3 years, and parent company Dine Brands is considering more aggressive measures to save the brand. The chain's inability to attract younger customers and shed its microwave dinner reputation has contributed to its decline. Golden Corral, the buffet giant, has been hit particularly hard by changing consumer habits and health concerns post-pandemic. Their all-you-can-eat model, once a draw for budget-conscious families, is now seen as outdated and potentially unsafe. They've closed nearly 200 locations since 2020, and bankruptcy rumors continue to circulate. Red Robin, known for its gourmet burgers, is another chain facing significant challenges. Their attempt to expand into fast casual dining with smaller format stores failed spectacularly, and they're now saddled with expensive leases in declining mall locations. The chain has closed 15% of its locations in the past year and is expected to announce more closures soon. Hometown Buffet and Old Country Buffet, both owned by the same parent company, have already disappeared from many states. The remaining locations are struggling with rising food costs and labor shortages. Industry experts predict these buffet concepts will be completely gone by the end of 2025. Steak 'n Shake, despite its loyal following, has been closing locations steadily since 2018. Their attempt to transition to a self-service model has been met with mixed results, and their parent company has been selling off corporate-owned locations to franchisees in a last-ditch effort to save the brand. Perkins Restaurant and Bakery, a breakfast chain that once had over 400 locations, is down to fewer than 200 restaurants. Their traditional diner concept has failed to attract younger customers, and competition from trendier breakfast spots has eaten into their market share. Qdoba Mexican Eats, despite being one of the larger fast casual Mexican chains, is struggling to compete with Chipotle and local Mexican restaurants. They've closed over 100 locations in the past 2 years, and their parent company is reportedly exploring a sale of the brand. Fuddruckers, the world's greatest hamburgers chain, has been reduced to a fraction of its former size. After being sold by Luby's in 2021, the new owners have struggled to maintain profitability, and many franchisees have chosen not to renew their agreements. Chuck E. Cheese, while still operating, has seen a dramatic decline in locations and relevance. The entertainment-focused restaurant chain has failed to modernize its concept effectively, and changing family entertainment preferences have left many locations struggling to attract customers. Bennigan's, which has already gone through one bankruptcy, is down to just a handful of locations in the United States. Their attempt to rebuild the brand has been hampered by high operating costs and changing consumer preferences in the casual dining sector. Marie Callender's, famous for its pies and comfort food, has closed most of its restaurants in recent years. While their frozen food business remains strong, the restaurant side of the operation has been unable to adapt to changing market conditions. The decline of these chains reflects broader changes in the restaurant industry and American dining habits. Rising food costs, labor shortages, and increased competition from ghost kitchens and delivery-only concepts have created significant challenges for traditional restaurant chains. Additionally, younger consumers are showing a strong preference for local, authentic dining experiences over national chains. Real estate is another factor contributing to these chain struggles. Many are locked into expensive leases in shopping malls and retail centers that have seen declining foot traffic. The cost of maintaining large dining rooms and kitchen spaces has become increasingly difficult to justify as more customers opt for takeout and delivery. The impact of these closures extends beyond just the restaurants themselves. Suppliers, employees, and local communities are all affected when these chains shut down. Many of these restaurants have been community fixtures for decades, and their loss represents a significant change in the American dining landscape. Looking ahead, industry experts predict that we'll continue to see consolidation in the restaurant sector, with stronger chains acquiring the assets of failing ones. The survivors will likely be those that can successfully adapt to changing consumer preferences while maintaining operational efficiency. For these 15 chains, the future looks increasingly uncertain. While some might find a way to reinvent themselves and survive in some form, others will likely join the growing list of once popular restaurant chains that now exist only in memory. Their struggle serves as a stark reminder that even well-established businesses must continually evolve to remain relevant in today's rapidly changing market. The question now isn't just which chains will survive, but what the American restaurant landscape will look like in the coming years. As these familiar names disappear, they're being replaced by new concepts that better reflect current dining trends and consumer preferences. Whether this transformation ultimately benefits diners remains to be seen, but one thing is clear. The restaurant industry we knew even just a few years ago is undergoing a fundamental transformation.